Good day, YouTube. This is Jay Money with Falling Forward Financial. I was going to do this video yesterday. I've been waiting for this one to split, and it's going to be here soon. But this is the one stock split company that should lead the market recovery. I'm sure a lot of people out there already know about this one and can't wait as well. Hopefully you're going to have a lot of anticipation with people getting into this one, so that's what I'm hoping for, but I don't want it to run up too much, especially after I get all the shares that I want to buy. But the widely followed S&P 500 index recently joined its technology-focused counterpart, the NASDAQ 100. Bear market territory. Both have been sliding since December of 2021, and investors are feeling from steep losses in individual stocks that exceed 80% in some cases, particularly in the tech sector. So understandably, investors might be looking for the best place to shelter their money from further losses in the short term. But it is always more beneficial to focus on the long term, because the economy and the market will eventually pick up steam once again. And none other than Google's parent company Alphabet, GOOG and GOOGL, might be one of the best picks to own in the current pessimism flips to optimism. So the stock split. First, going to address the stock split, which has put the company in the headlines this year. When a company grows over long periods of time, its stock price often rises, sometimes into four figures per share territory. This can make it expensive for smaller investors to own. The retail investor would have to pony up $2,142. So that's pretty much what Google is right now to buy a single share. Otherwise, you can buy slices on Schwab, M1 Finance, a couple other. You can throw $10-20 at it and get a slice of Alphabet. You're not going to get the whole share, but just a slice of it. That's why it's called slices. So the company has opted for a 20-to-1 split. So waiting for the 20-to-1 split, and it will increase the number of shares in circulation by 1,900%, while reducing the price per share to 1/20th of its current value, original value. The split will take place effective on July 15th, but if it were to happen today, Alphabet's stock price would shrink to roughly $107.87. So very nice. You can get a piece of Google for that amount. It's important to note that the stock splits don't add any real value to the underlying company. They're purely cosmetic, though if there were any benefit, it's that Alphabet's shareholder base might broaden to include more retail investors, which could in turn drive the price up, which could boost its overall value in the short term. But in reality, the only thing that we can deliver gains for Alphabet's investors is sound business performance, and the company has that in abundance. So growing beyond Google's not going to stop growing. It might plateau at some time, but it just keeps going. They keep adding services. All their services, cloud, ads, all of it, all adds up. So Google's popularity as a search engine is evident by its 92% share of all internet searches globally. So that in itself has got to say something right there. So it's more than the majority. It remains core Alphabet's foundations, particularly on the financial side, as the advertising dollars generated by search account for over half of the company's total revenue, and despite difficult economic conditions in 2022. Segment still grew 24% year over year in the first quarter, and like I said, it just keeps growing. So Alphabet gets notable contributions from its other businesses units like YouTube, its cloud computing division, Google Cloud, and its hardware products like the Pixel smartphone and the Nest series of home devices. So, also working on AI. They're working on EVs. You name it, they're in it. So, YouTube is one of the company's most interesting opportunities right now. Social media is being dominated by short-term video format, led by ByteDance TikTok, which has been the most downloaded app globally for the last 3 years. To compare, Alphabet launched YouTube Shorts 2 years ago, and it has taken off like a rocket. Amazing 1.5 billion monthly active users already suggest that figure places it on a level ground with TikTok. So I've seen shorts on YouTube, Facebook. Shorts are all over the place now, so it takes into consideration everybody's short attention span. So squirrel. YouTube has generated $29.7 billion in revenue over the last 12 months, or about 10% of Alphabet's total. But since the short-form video is most popular among younger users ages 16 to 24, YouTube Shorts could breathe new life into the platform. Young consumers are a covered audience for businesses, so this could be a big opportunity for YouTube to expand its revenue base further as the economy recovers. So, like I said, they're just keep throwing ideas out there, innovating. You got to keep the revenue going. So, Alphabet generated $76 billion in net income during 2021, or $112.20 per share. Analysts expect that figure to fall modestly in 2022 to $111.52 amid tougher economic conditions, but that places Alphabet stock in a very attractive forward price-to-earnings multiple of 19.2. It's a slight discount to the NASDAQ 100 forward multiple of 19.8, which might be an opportunity for investors to buy the stock now, because Alphabet's earnings are expected to return the growth in a big way in 2023 to over $132 per share. So again, now would be the time to get into this one. That's how I look at it, especially after the split. Not that I give tax, legal, or trading advice, but keep in mind July 15, investors will need to divide the above earnings per share figures by 20 to adjust for the stock split. So should be some exciting times and for Google here in the next 2 to 3 weeks. So Alphabet's advertising focused business might be among the best performance when the market recovers, given their sensitivity to economic growth. But those gains will captured now while the stock is down 28.4% from its all-time high, which this one was up above $3,000 for a while. So waiting until 2023 might result in the chance being missed. So definitely don't want to miss the chance on this one. So not only don't want to miss the split, but the growth that could come thereafter. So, but that's it for Google. I'm sure I'll be making some more Google videos. I've already done some in the past. This is probably one of the first ones, or first couple of the split, so trying to cover that as much as possible. But I'm sure I'll be looking at this one in the future. So, and if you haven't smashed that like button yet, go ahead and hit that for me, as well as subscribing and hit the bell so you're notified of when the next videos drop. Again, this is J Money, Falling Forward Financial. Happy trading, happy investing, stay green. Cheers.